All right. We have market review for today, 10/10. This is Friday, October 10th. I'm on my practice account. Let me go to here. We are minus 1,500 for today. We'll start with how market moved today. So initially coming into the day, we were really choppy. So we just waited, marked out our key levels, and waited for a break and retest, which we did get here. Okay, we did indeed take this trade. 943. Break retest. We ended up entering on this 940 candle, and we did just get wicked out. So we re-entered on this candle, and looking forward to our multiple. Okay. We ended up losing the first trade about 700. Then we entered this trade. We ended up taking partials. I'll end up playing the trade here later. But on this trade, we took partials about, I tried to put it halfway to the full TP. Well, I seen it, obviously really strong green candle here, or white candle. Actually, I might change that because I don't know. We'll just keep that. Well, no, for 6. That's down. Well, what about black? Yeah. Wait, that's reversed. It's a lot easier. Green, good. Red could also be good. We entered. I took half off. Well, I set sell limits about halfway through the trade. That got tapped, and that left us minus 190. Or no, 170 something. Then we end up, I moved stop loss to break even, well, a little bit above break even, like $10. And we end up tapping that, and we're at like 190. So we were plus 190 on the day so far from just this trade. And I don't know what else I took. Plus 190 on the day. And we go back in, we're chopping around. And I really wanted to take a trade. Kind of called this out. I don't trade this, but double top near equal highs. I seen this fall. It's like, yep, that's falling. So it did. Then we're just consolidating. We come back up. Now I could have took a trade off one of these retests and like put my stop loss here and have like potentially down here or down here, but that one I got hit and the stop loss would have stopped us out. But we don't trade that, so that was my thought process though. But consolidating, and then it was actually right before market shit the bed. I knew it was a bad day to take any more trades. We're already plus 190. It's like, all right, we'll just wait and see. And I should have never even took this trade. Yes, it was good. It was a good looking trade, right? Just block this out. Stop. Block this out, right? Break retest. Beautiful. So, not knowing that this was going to happen. Well, you can't really know. We did enter another trade, which was dumb. Was really dumb. Already consolidating this whole day. Really bad day for me, for my trading strategy. I mean, this didn't even hit full TP, so it was just like a real, and it came right back in. I should have just stopped as soon as this came back in the range. I trade basically continuations, so all this I already knew. This trade was really like low probability, which I shouldn't have been taking anyway. You know, we take this, we look for 1 to 2, high of day maybe, even. So I mean that's good. That's a good RR, but that doesn't matter because as soon as we took that, red, and then we were stopped out literally 2 minutes later. So minus like 562 right now. Then I'm waiting. I was like, all right, I'm about to hop off. What the hell is this? 10:57. Trump says something about China and China. Well, shit the bed. Really shit the bed. So, of course, don't ever do this. I should have never done this. So I'm in the red today, pretty bad. Well, 1500 is like a normal, a little bit above or below or above average normal losing day. Like I should only be losing. If I'm taking a trade, I'm risking 1,000 to make 2,000. And that obviously depends where, you know, the stop loss is and whatnot. Well, when I was at 100, when I was plus 190, I was like, man, I'm already, I'm plus, and you know, usually I lose $1,000 when I do lose on this account on these evals. These are evaluations, and I was like, man, I have more room, right? So that's why I took that, and that was dumb. I should have just stopped right there, minus 5 something. Not even that bad either. But no, of course. And as soon as I ended my recording, so I didn't have it on recording, but it was a terrible trade. This shit's the bed. Okay, and then I'm on TikTok. I'm on this TikTok live. It's like, yeah, guys, I'm getting in on longs here. Maybe it'll come back. So I was like, fuck it. You know, okay, that makes sense, right? Comes all the way down here. Maybe, you know, that retrace back up. Not retrace, but, you know, big sudden move. Maybe big sudden move up, right? Catch that move up. Nope. We took a 4 contract trade. We tried a long this, and we entered, I think, somewhere one of these 2 candles. Well, it did not come back up. Matter of fact, I should have shorted if I were to. I don't know why I tried to catch the move up. I should have just went with it, because if I did, then lucky me. Look at, we end up falling. And yeah, I lost 1,000 like that. So I'm pretty sure my initial was like 576, somewhere around there, and then just 1,000 gone in like 20 seconds. So that was real dumb. That was really dumb. But as of market, where do I want to see it go? Quite frankly, I don't really care where it goes, because it's the weekend and we got till Monday. Then we'll do a market review there. Why do I have all these boxes? But then also I was thinking about possibly trading, like looking at both the S&P and the Nasdaq at the same time. Because they're basically the same. Ooh, you can compare symbols. So, hold up. So I might actually I'll be able to compare. So, and if I put, because sometimes S&P leads and then sometimes the Nasdaq leads, and you want to take trades on the ones that's leading in your direction, right? Right, did I just have that? Okay. Wait, where's that? No. Yes. Okay, so the Nasdaq is leading right now. So you would want to take a trade on the Nasdaq. Don't know why it's not letting me like move when I compare. Yes. Anyways, those were my trades. Now let's go to my video and kind of review them. Hello. Can I add another chart? I don't know what. Okay. Alright. Now, let me pause. I'll just combine them. I accidentally stopped the recording. But I'll just combine both of the videos. This is watching over my trades. So I already made the video and like cut all the trades. So this is the entry
Order
of my
filled.
initial first one. Break, retest, strong price action. My mistake was not moving my stop loss to, you know, give it more space, basically. I should have moved it below wow, okay, that would have got tapped if I would have just moved my stop loss. Well, actually, I see this is I don't know what to do when I have a hard stop. I don't know how to like not have a hard stop. Because like I don't want to move it or not have one at all, and then I just like absolutely got slammed. But what I should have done is have my stop loss there, keep my RR the same, but well, I would have a gnarly wick. What if I had a gnarly wick? See, I don't know what to do there. But anyways, my webcam's all messed up. And I'm gonna de-risk my stop. It was a good trade. It was a really good trade, and this would have worked out if I had my stop loss moved differently. Did I end up? No, I ended up moving it back. I don't know why the quality is so shit. Okay, there we go. So we get stopped out here. This is the candle,
Order
and then
filled.
it wicks back up. Okay, minus 771. So we re-enter, and I didn't really. Oh, okay. So it was up here, and I don't. It doesn't get tapped. This never ends up getting hit, but my first one does. So I guess I don't. Do I have to wait more? Maybe I should have waited more. It's my first trade. We end up taking a nice big candle up there. Looking real good. It's like, okay, this is really solid. So then we take to contracts out, and then we tried to hit another one and then leave one running, which is dumb. I should just, if anything, at full TP, leave one contract. So I should have just left my TP there. But actually, I'd probably be down a lot more if I did do that, because my break even would only been like 10, and here I am moving my stop loss because I don't know what the hell is gonna happen. But we get stopped out here. Eventually comes back down. Of course, this is, I like these candles. I should do this instead. So, this was the shitty one. I mean, a good setup, but like, look at all this. I already knew this was a bad idea. Well, we get stopped out here. This was just a bad trade. I was using the restroom. So, minus 500. Yeah, we're already minus 190. Well, no, we weren't up at all today. We were minus 190 on the day, which I was like, this is easy. We get yeah, that is it. Other than that,
Tired of spending hours managing your digital ads? We get it. It still feels like 10 tabs open, 3 spreadsheets deep, and 100 tiny decisions every day. Meet Amanda AI, a fully autonomous advertising platform that runs your campaigns across Google, Meta, and Bing. So you don't have to. Or, as we like to say, just dance to the algorithms. Our platform makes millions of smart decisions every day. It creates, tests, and adjusts your campaigns automatically, replacing manual effort with unstoppable output. Why chip away with a spoon when you could fire up the bulldozer, huh? So say goodbye to heavy lifting and repetitive manual work. Instead of adjusting bids, juggling budgets, or spending hours making data-driven guesstimations, Amanda AI does it like French electro. Harder, better, faster, stronger. But you're still in control. You set the direction. We handle the execution. Whether you want us to build a new structure or take over your existing campaigns, Amanda AI starts optimizing from day one. And we're not talking just optimization, we're talking relentless optimization. Amanda AI is also a gold digger, continuously fine-tuning your bids, audiences, keywords, creatives, budgets, and more. Always ready to outbid the competition and win the placements that matter. Yay! Whoop, whoop. And yes, Amanda AI supports it all. Search, stories, reels, shopping, DSA, feeds, performance max, and everything in between. We can even plug in your Search Console data to turn organic insights into paid wins. Ka-ching! No more paying for multiple tools, no more channel silos, just one platform to rule them all.
I own it, but my stats, this isn't probably half of them are really shitty bad trades, like the two I just did. Consolidation trade, and then I tried to long the Trump speaking, or not speaking, tweeting.
What's the best way for beginners to start investing online with just $100? As a millionaire investor, this is something I get asked all the time, and because of that, 4 years ago, I set out to answer this question by creating a video where I invested $100 into 5 different things. Today, I'm going to compare the results from those 5 investments that you can make from your laptop and try to finally answer the question once and for all. We're going to be using this grid to judge each one in these categories. First up, learning curve. This is how long it takes to learn the ins and outs of each method. Ideally, we want this to be as short as possible. Next is passive income potential. which is how much money an investment can earn for you passively while you still own it, without needing to sell it. Then there's tax efficiency, which refers to the specific tax advantages or benefits available for each type of investment that can help you pay less tax. After that, we have risk level, which is about how likely you are to lose money and how much the investment's value might go up or down. And finally, we're looking at the results. This is where I'll reveal my percentage return over the last 4 years and exactly how much my $100 investment is now worth. Before we jump in, please remember, I'm not a financial advisor. I'm just sharing my own results and strategies that have worked for me over the years. Please also do your own research.
And then the second pull for it was
Okay, first up is individual stocks. Individual stocks give you the chance to own a piece of the company you believe in. This can be really exciting because you're directly investing in businesses that you think will grow or succeed. For learning curve, I'm going to say this is high. If you want to be successful picking individual stocks, then it's not just a guessing game. You'll need to dig into the nitty-gritty of a company's fundamentals. This includes looking into the financials, who's leading the company, and how well known the brand is. When I invest in individual stocks, I look through income statements, balance sheets, and cash flow statements. So when I invest in a stock, I'm in it for the long haul, which means at least 2 to 10 years. A great way to learn how to do this is by using an investing app with a demo account, which lets you play around with fake money until you're confident with your strategies. For passive income potential, I'm going to say this is good. You see, when you own a stock, there are 2 ways you can make money. Firstly, if the price of the stock goes up during the time you own it, you can sell it for more than you paid. Secondly, you can receive dividends. Dividends are regular payments to shareholders. Not all stocks pay dividends, but if they do, this means you can receive money without ever selling your stock. This is essentially passive income. Now, for tax efficiency. This is great. If you use the right accounts, then you can reduce your tax burden. In the UK, these are called stocks and shares ISAs. You can set one up on most investing apps, and any profits you make are safe from taxes. In the USA, there's something similar called a Roth IRA. These accounts work like a shield, protecting your profits from the taxman. While there are different rules depending on where you live, the idea is the same. Please bear in mind that I'm not a tax advisor and you should do your own research as everyone's circumstances are different. So what's the risk? This is definitely high. Back in 1995, during the dot-com boom, I got lucky and picked a few great stocks. I sold them at the right time and made a lot of money in a short period. But when the bubble burst, some of the other companies I'd invested in, ones that cost me very little, went out of business completely, even though I ended up making money overall. It just shows how risky investing in individual stocks can be, especially if you put all your money into just a few companies. If they fail, you could lose everything. So let's look at how much my $100 investment is now worth. Let me refresh your memory. Here's what I invested in. So I'm going to throw a dart at the board, and as you can see, I randomly selected 20 different stocks. And wherever the dart lands, that's what I'm going to invest in. Now I've just got to put on a blindfold. Okay, here we go.
And look,
right, let's see what we got.
I just needed
and we've gone into Samsung. That investment is now worth
2 days.
$67.66. But don't forget my dividends. Over the 4 years, I made 10 cents. So that leaves me with a total of $67.76. That's a negative 32.34% return. This example perfectly shows how hit or miss individual stock investing really is. That dart could have just as easily landed on Apple, Microsoft or Nvidia. So let's have a look at how much I would have made if that dart had landed a bit differently. A $100 investment in Apple 4 years ago would now be worth $170. The same investment in Microsoft would be $188. And drum roll please, Nvidia would be worth $908. Those stocks have boomed in recent years, and luckily I have some of those in my personal portfolio. But this just goes to show you can't just leave individual stock investing down to luck. You have to be strategic with your stock picks, and even then the market is unpredictable. If you want to try this out, just download Trading 212. It's a great app for beginner investors because it lets you use a demo account to practice trading with fake money. This way you can learn how it all works without risking any real cash, just like I mentioned earlier. It also lets you set up a stocks and shares ISA if you're in the UK, which protects your investment returns from taxes. But again, I'm not a tax advisor, so please do your own research as everyone's situation is unique. Trading 212 also lets you buy fractional shares, which means you don't have to buy a whole stock. That's how I was able to own just 0.07 of a Samsung stock, instead of having to buy an entire share. As I was going to mention Trading 212 anyway, I reached out to see if they'd be interested in sponsoring this portion of the video. They agreed and are offering a free fractional share worth up to £100 to anyone that uses the code Tilbury when they create an account. Plus you can get more free shares by inviting your friends. Both of you will get a free share as long as they fund their account. I'll leave the link in the description if you're interested.
You don't see like really big ones.
Second is a real estate investment trust, otherwise known as a REIT. I know this one sounds pretty complicated, but it's actually quite cool. Imagine your friend collects $100 from 3,000 people, giving him $300,000. He then uses that money to buy a property, rents it out, and shares the rental income with all 3,000 people who helped him buy it. That's a simple way to explain a REIT. It allows anyone to invest in properties without needing to buy one themselves. Think of it like you own the front door, someone else owns a window, and a few others own the bricks, which means together everyone owns the entire property and shares in the profits. For learning curve, I'm going to say it's moderate, and that's because getting started with REITs is much easier than buying physical property. It's not like you need a huge down payment or a mortgage, and there's no need to deal with agents or solicitors. However, you do need to understand how REITs work. They own things like offices, shopping centres, apartments, hotels and much more, and they get their income through rent. For passive income potential, I'm going to say this is great. REITs are well known for paying high dividends. This is because the law says they have to pass on at least 90% of all their profits to investors. So as long as the REIT is doing well and its properties are rented out, you can earn a steady stream of passive income. Most businesses sign long-term leases on their commercial properties. Therefore, most of the time, income is pretty stable and reliable. But of course, just keep in mind that your earnings depend on the REIT you pick and the types of properties it owns. For tax efficiency, I'm going to put this down as great. This is because in many countries, REITs offer great tax benefits. For example, in the UK, you can hold REITs in a stocks and shares ISA, which means you don't have to pay taxes on your profits or dividends. In terms of risk, I'd have to say this is medium. REITs are generally less risky than buying a single property because they invest in multiple properties, spreading out the risk. However, they're not risk-free. If the real estate market takes a downturn, or if the REIT struggles to keep its properties rented, you might see both a drop in dividends and the value of the investment. So what's my investment worth now? Let's flash back to me making the investment 4 years ago. As I'm in the UK, I'm going to use the Trading 212 website to put $100 into a similar REIT. Ready for the moment of truth? Looking at my investment now, I can see it's worth $98.59, so that's a small loss of 1.41%. This shows that even though REITs are normally more stable than individual stocks, they're not guaranteed to perform well. My REIT likely underperformed because it invested in commercial real estate, which struggled during the pandemic. But that's not the end of the world, as I made $11.93 back in dividends, meaning I'm actually $10.52 up. So that's 10.52% up. Third is cryptocurrency. Imagine a form of digital money that isn't controlled by any government or bank. That's what cryptocurrencies like Bitcoin and Ethereum are. These currencies run on the blockchain technology, which makes them secure, transparent, and almost impossible to counterfeit. Cryptocurrencies have created massive wealth for some people, with Bitcoin being the best performing asset of the last decade. But on the flip side, it's highly volatile, and people have also lost fortunes. That's why I describe crypto as part investment and part speculation, and not for the faint-hearted. For learning curve, I'm going to say it's moderate. Crypto might sound complicated, but I'll break it down for you.
This one.
First, you'll need a wallet.
Wow,
this is where you store your crypto. Think of it like a digital piggy bank, and there are different types. First are online wallets. These are easy to use, but you'll need to protect them with very strong passwords. Second are offline wallets, like hardware wallets. These are the safest because they're not connected to the internet. Next, you'll need to pick an exchange to buy and sell your crypto. Some popular ones are Coinbase and Binance. These platforms make it simple to trade.
Why is that playing? I hope that's not on the... I hope that's not. Oh, it probably is. Well, you got him playing in the background. No one ain't watching. No one needs watching. No one's watching this. I'll be alright. But my journal will explain. I've been absent for 2 weeks. When I draw down on an account, I took a payout, $3,400. Okay, I had to pay out $3,400 on that $50,000 Express account, and took a payout. Went in a drawdown. I'm trying to get. I literally need like one more payout. Well, no. So initially was. I thought I needed 30 winning days. So I'm like, okay, let me get there. I get there, and I find out you have to have 5 payouts. So I'm like, okay. So we start trying to get to 5 payouts, and I'm just losing. And then some of those days, of course, I take 2 trades, and they both lose. Really dumb, by the way. A lot of those second, like the first trade loss is my initial like setup, and then the second trade is off like a higher high, or just trying to predict the next like lower low or whatever. They're dumb trades. They were dumb second trades. So I just need to learn to take my first trade. If it's losing, then we either stop or wait for the 84. That's the only reason I should be taking another trade. Is if it still meets the criteria. That's why I entered today. And that second, it still meets the criteria, and it's my initial basis that I don't want that break and retest, and still in that same area. So that's why I re-entered with that candlestick that was really strong. So I got wicked out. Initially, that first trade would have won, but that's besides the point. That's the only reason I should be taking 2 trades a day. I only should take one A+ trade. Simple break and retest with strong price action based off of key levels. That's all I need to do. And then if it's consolidating, I get off for the day. I just don't trade. But my brain loves trading. I need a trade. I need a win, or I need to lose, or I just need to trade. I'm chasing that freaking dopamine. So mentally, I'm almost there. I'm almost like so dialed in. I'm so close. I need to be dialed in just a little bit more. I need to take advantage of this full port working out, and we're going to get there a lot faster than I initially thought it was because of that full port working out. But it's just a matter of how good this next 2 weeks goes, because if these next 2 weeks go good, then we probably are there or damn near close of getting both of these passed, and I can start building my 2 $150,000 evals, which was my plan. So since let me tell you a story about that. This is gonna go long. So I have receipts of kind of not being like a scammer. I don't know, but I'm honest. So I go in a drawdown doing really shitty, and Tuesday, whatever the hell that day was, I made $204. So what my initial thinking was, I was like, okay, if I blow this account, whatever, this is my villain arc. I'm literally like 2 green days away from being able to get a live account. I thought when you get a live account, you get the money that you made, or the money you made minus the account amount. So I made $9,000 minus 40 or 50,000, you get $41,000 to play with in the live account. No, that's not how that works. I don't even know why I was thinking that, but that's what I thought. So was like, okay, 2 more green days. Get 1 more green day, and I started looking. Okay, I'm so close. I need 1 more green day. Okay, what is a live account? What benefits do I get? I know the benefits. I just wanted to make sure. Well, I find out it's not that. It's actually the balance that you have in your Express account combined with all your other accounts. Well, that sucks for me because I only trade 1 account. I only have 1 account. So I've been trading and taking payouts, which is cool. Yeah, I made $10,000 last 2 months, technically. So 3,000 and 6,000. That month was awesome, and whatnot. And I thought I was getting money, but no, I was just taking it out, and I was actually hurting myself by doing that because I need that money so I can get a live account, and then I start building that account up, and then I can take out all the money. So instead of getting live account now, because once you get a live account, it combines all the accounts. I didn't have any more accounts besides 1, so I started evaluations. I started Wednesday, the 8th. Yeah, the 8th. I started evaluations Wednesday. That's when I accidentally full ported my account, and I got a great start. I was like, man, this is the gods. Like, all right, here's your shit back, because the last 2 weeks have been real shitty. It's been losing, and so I was like, okay, I accidentally full ported doing dummy shit. Like, I didn't mean to do that. Good thing it worked out, because if it didn't, but it worked out. Okay, it worked out. I was like, all right, let me take advantage of this money. But that same day, I made the money. I'm at 62,000 up on the account. Literally, 28,000 from passing. Right, 8. Yep, 2. And then $9,000. You can't think that way. You got to think of the buffer. I was like, man, got a lot to play with. Got a lot to work with now. Now my minimum is, 150,000, because it trails up to 150,000. Take a shitty trade and we lose. I was like, all right, we're done with the day. 57,000. I was like, okay, this is great start to evaluation. Go in the next day, minus 237. Fine, that's completely okay with me, because usually I'm losing 1,000 to 1,500 per trade, right? Well, that's what I should be losing at least, and that doesn't work like that, because placements of your stop loss and your take profit vary from each trade. And then we go into the next day, and this happens today. But that's my plan, is to build up these evaluations, maybe have like 20, 30,000 of them in each, because they're following each other. So whatever I have in one, I have in another. So if I can get one to 20,000, the other to 20, that's 40,000 already. I mean, $40,000, and all I have to do is go back in another account, get $200 more with $300. It's very, very easily, a lot more doable than doing with $58, which I had, and then I full ported like that part, because I only had $58. So it's like, okay, I'm either bloating an account or making another green day, which I end up winning. So we should be able to get another green day, and then request a payout of 150. So it's tight over there, but let's just get to the part where we're building my evaluations, and where we have like $20,000, $30,000, $40,000 in each one. So we build those up, then we get the live account and combines all 3, and then bang, we got possibly a lot of thousands of dollars to scale. And that's my plan. So when I'm there, I should be mentally, emotionally, strategically there to build this account to where I can do whatever the hell I want, really. But in the long term, I want to be able to obviously build the account, and then hopefully maybe maybe a year or 2 years. Years sound long, but they're not. Maybe have the account, really high, maybe 1,000, 100,000, 200,000. Take that out and then go into my own broker, and then throw a lot of that money in there, and then scale it, because there's no limit to your own account. Scale the shit out of it, but also whatever I take out, I'm gonna invest and build my own nest egg with that. And then while I'm doing this, I'm building up my social media following, and hopefully can sell $10,000 courses. Yeah, no. But I mean, if I am smart enough, maybe I sell my knowledge, because knowledge is important, like all these other people. And I don't want to say gurus, but like, they're smart people. They're smart. They know what the hell they're doing. But I wouldn't buy their course for $15,000. But I'd buy my own course for $15,000 if I knew what I was putting in there. But not really a course, more like a couple other guys do on YouTube. They trade live with you guys, so I could do that, and obviously build my personal brand. Maybe do some whatever the hell not, but that's down the road. First, we gotta pass these evaluations, all right? So we're done. That's the last 2 weeks, so I've not been posting. Really just want to get these evaluations. So disappointment would take, you mentally think disappointing, so not really disappointing, but like long term, a month. Realistically, will it happen before a month? Yes, it will. It 100% will happen if I just stick to my strategy, stick to my plan, nothing else. No dumb shit, no overtrading. That's what I'm going to do next week. That's my goal for next week, is to only take 1 to 2 trades, nothing else. Unless it's like 100% good ass setup, no other trades than 1 to 2. And the second one should only be the same thing that happened today. It's like literally you get wicked out and like it's the same setup but a better entry, or it was actually a shitty entry, whatever. It was the same setup, same idea, same thesis, same process, same trade, same setup. 1 to 2 trades next week. Got a month. I'm gonna do it within a month. I'm gonna pass these evaluations, activate them hoes, and we get scaling and building on them bitches. Alright? And that's it. We got the weekend. Sucks going in minus, but you know, that's the trader's life. So holler till next week so we can start, trading, because what the hell else am I supposed to do during the weekend? My girl's out of town. Might go to some parties, play the game, do some market review, maybe just look over the market. I'm watching a shit ton of psychology videos. This video is already 30 minutes deep. A lot of yapping. I watch a lot of YouTube psychology, financial advice, psychology about your like first $20,000, $10,000, $100,000. It's good stuff. It's good stuff. But other than that, I love money. I love the stock market. I love trading. Most importantly, I love life. Because what the hell are we gonna do? You think I'm gonna go to work, work a 9 to 5? You got me. I gotta find another way. So if this doesn't work, it's gonna work. Okay, because I have no other plan. Like, I thought about going in the military. I literally stood up in high school. Stand up if you're going to the military. Like, during graduation, I stood up. Well, I'm not. And I'm not trying to. And I'm trying to make this work. So, I gotta dial in. And I've been dialed in for the past, ever since I started that evaluation. So, a couple months. But I need to get my mental right. And, once I do that, I'll be unstoppable. Once I learn to take no trades is a good trade, and learn to take a loss and not overtrade, obviously. And then not even okay, I'm down $120. So what if you usually lose 500? Don't take another trade, because you're probably going to lose. So take the money that you do have and you didn't lose and just leave. I need to tell myself that. But once that happens, I'm so close. I'm so close to greatness. I'm so close to greatness. I can feel it. I can feel it. I'm so close. And once I pass these evaluations, start scaling, it's only a matter of time. Okay. I'm posting on TikTok. I need to post more. But that's really it. It said market review. Well, hidden in the market review is a really just yap sesh. Real yap sesh. Maybe I'll do yap seshes. I don't know. But if the market is gonna be here tomorrow, why rush today? Well, no, that's my quote in my TikTok bio. But all right, enough yapping. I'm gonna go. I don't know. Look at the stock market even more and do nothing until I gotta work in an hour. Holy shit! I gotta work in an hour. I gotta go. I didn't realize that. Bye.